Welcome back to my morning report. Chart appraisals on Tuesday, the 19th of January, with me, Rich Perry, market analyst at Hantech Markets. Let's look at cable, and we've had a slight increase in cable. We haven't seen that for a while, so are we going to get excited about it? Well, it's sort of unwinding, isn't it? Some of this move. Now, I spoke in the morning report about this, the interesting feature on this chart, which I believe is this key support of 42.30, which is very quickly that 2010 low, 42.30. And what we have seen is a what is arguably an inverted hammer candlestick at the bottom of a downtrend, which can be, and I repeat this in inverted commas, can be a sort of possible turnaround candle, and it depends on the subsequent candle, because what you do see is basically, if I zoom in, basically you get this sort of intraday rally, which causes the upside tail and subsequently sold off, which suggests that there is buying. There are buyers ready to move in. It's just that they haven't sort of got the confidence yet to continue to push on. Now, today we've seen 70 ticks up on cable, and again, is this sort of the start of a bit of a recovery? There is scope for a recovery within this downtrend. Today, the downtrend comes in at 44.90, 43.20 currently, so there is a scope for 170 ticks more in this rally, and you could still be in this downtrend. So there is prospect of a bit of a near-term recovery. You've got the RSI 25. We've had 70 ticks up on today, which is a fairly big move, and yet the RSI is still at 25. That just shows you how bearish it has been. 17 it got to yesterday. But the other momentum indicators pretty much still very negative. The only thing I would say is that you need to look out for the key levels on this chart, on this hourly chart, the key old supports that become new resistance. Time and time again, I talk about this every day. The old support becomes new resistance. Old support becomes new resistance. Again, 43.50 is the latest level. 43.50 was that reaction low that we saw on the 12th, and then that becomes the overhead resistance. That is the level that we need to break to the upside for us to get interested in this. We've got 43.20, which is the reaction high from yesterday. At the moment, we're sort of almost touching that, aren't we? So that is your initial resistance, but the big level that initially that we need to really get through is 43.50. And then, arguably, you need to start sort of trading through these reaction highs as well. But 44.90, as I said, is that downtrend today, and that again is another area of sort of old floor is new resistance. So there is significant overhead supply still in place that needs to be taken out. Now, I said on the morning report that you want to start to see this RSI coming towards or even above 70. Now we're at 68 now on the hourly chart. So is this the start of something? I think if we get through 43.50, maybe you can start to sort of believe a bit more in a recovery. It is beginning to build. You see the MACD lines, if they go above positive, again, that would be a very positive sign. Stochastics, if they can hold above 80 on the hourly as well. So all these things you need to look out for this being a recovery. But at the moment, it is still a bit of an unwinding bounce, but it could be more if it breaks through all these key levels and sees these improvements in these indicators. So I wish you good luck in your trading today, and I will speak to you later.